Welcome to the A Minute to Midnight show, folks. This is Tony coming to you from New Zealand, and I have a returning guest on the show today, Lynette Zang, who I very much enjoy having on the A Minute to Midnight show. Lynette, you've been on a few times now, and the discussions always are very interesting, so welcome back.
Oh, I'm happy to be back, and I really appreciate it, too. I love coming on for you, too. I just need to get there in person one of these days.
Yes, it would be good. I'm just hoping that we'll actually get some decent weather. We're nearly summer, and at least in this part of New Zealand so far, we haven't really had a very good spring, so hopefully it'll sort out. But anyway, but it is a beautiful country, even when the wind's blowing like crazy.
Yes.
So, yeah, there's a lot been happening in the world, all up, and in the financial world, obviously, is a lot going on, and it can be quite confusing for people, I think, because there's so many mixed messages being sent. And Chris, who is a good friend of mine and part of A Minute to Midnight, this sort of team, he's more clued up on financial stuff than I am. He sent me some questions, and I've got a few of my own, so I thought we'll just launch into it and see where we go. Perhaps a good thing to start with is that you have often said in commentaries that we are currently in a reset. Maybe you could explain to our listeners that aren't familiar with it just briefly what that term means and how are we experiencing one?
Well, there's different levels of reset, but inflation itself, a reset is a revaluation. And inflation itself, by design, fiat money, has that built-in inflation. And right now, the target for most countries is 2%. But personal experience tells you otherwise. So people always ask, well, when is this going to happen? When is this going? The reality is it's been happening since the day you were born, but we are now at the end of the fiat money experiment's life cycle. And so what people are really looking for and what we are unfortunately most likely to be experiencing reasonably soon is a rapid reset. So for example, if I go into your house every day for 30 years and I take a button, by the end of 30 years, I'm going to have a lot of your buttons, but you're probably not going to notice that I took them. If, however, I go in today and I take 90% of every button that's in your house, chances are when you go to get dressed tomorrow, you're going to notice it. So that's really the difference between a slower reset and a rapid reset. And because there's because there's officially almost no purchasing power left in the US dollar, but this is true globally, so it'd be true for the New Zealand dollar as well, then they have to make a shift or a transition or a reset, if you will, into a new monetary system. And it is most likely to be a digital system. And if we don't pay attention, they know that we're paying attention, it will probably be in a way that they can continue to take away, but now our principal, because with inflation, with a $1, there's only 2 decimal places. But once everything is digital, well, they can have a lot of decimal places. So they can continue to rob you, but now of your principal over time and do it somewhat invisibly, just as inflation has reset the value over time.
So with it ongoing and when it hits, hard, are we likely to experience inflation, deflation, or stagflation, or what and why?
Well, actually, inflation and deflation are they're different sides of the same coin. Either way, most likely it's deflation first, which is what all of the new money printing and all the new QE, don't call it QE, but all the new QE money printing that's going on once the central banks globally did a pivot from trying to reduce their balance sheet and raise interest rates to shifting to now just lots of monetary heroin into the system. So they're fighting the deflation. And ultimately, when confidence is lost, that's when we're going to see the hyperinflation. But it could be a hyper depression as well. And the reason why I say that, it's the same thing though. It doesn't really matter. The difference would be if they have us in a digital system, how low below zero will they go on interest rates so that any of the money that you're holding in a bank account, how quickly will you watch it evaporate when you're not spending it? Right? That's what they're really talking about. They're even, if they do keep cash, they're even talking about keeping chips or putting chips in the cash so that whatever the rate is on the bank account would also be on the currency. So, but either way, it's going to make you want to spend whatever you have to attempt to retain your principal. Like, rather than keeping it in the bank account and watching it lose 4 or 10% or whatever that number is going to be, you're better off putting it in a glass where you can trade that glass for something else that you need. And that's the same thing that happens in hyperinflation. It'll be the same thing that happens if we go into hyperdeflation, just by the fact of them lowering the interest rates farther and farther below zero. But, having said that, Tony, you're having those that have been involved in negative rates for so long. So in the Eurozone, in Denmark particularly, in Japan, them coming out and saying that it doesn't work. No, it doesn't work. It actually destroys your financial plumbing with banks as intermediaries to transmit policy through the economy. So, hyperinflation, hyperdeflation, either way, it doesn't really matter, but there is only one way to fight deflation, only one, and that is with inflation. So that's why you see the central banks globally struggling with generating that 2% inflation. Though, here's my question. Are you experiencing only 2% inflation in your cost of living? Anything that you do,
No.
whether it's food or insurance or medical or education or gasoline or...
Yeah, well, gasoline certainly went up a big heap not too long ago. So, yeah. So, like we're getting these mixed messages. I've been seeing, there's all this talk of, the economy's in a mess. And then you get the other side coming out saying it's going to be great and 2020's looking like it's going to be a boom year. And you've got these total mixed messages. And I'm thinking, well, like what's happening with the stock market? It's going to new highs,
Yes.
which is probably caught some people by surprise. What do you think is going on there?
Well, there are a bunch of things. Number one is all of that new money printing that the central banks are doing. So when they create new money, it has to go someplace. Having said that, these markets are making new highs on declining volume. So in other words, fewer and fewer people are actually buying stocks, and you can see the decline in volume. In addition to that, there are just a few companies that are pushing the markets to new highs, but most of the underlying companies are actually far away from their new highs, and they are declining. In addition, you have to keep in mind, and people don't really realize this, but like the Dow Jones Industrial Average, which is an index of a number of stocks. But when a stock is not performing and it gets to a certain level, it's changed out with another stock. And according to one of my brokers that actually, or I should say my strategy specialists that actually track this, since 2006, roughly 50% of the stocks in that average had been changed out. And if they had not been changed out, if it was actually a consistent average, we would see the Dow at 12,000 rather than 28,000.
I hadn't heard that
So
before.
it's a fact. I mean, they've been changing out the stocks in the exchanges, all the exchanges, really since they first started with it. You have to meet certain criteria or they change it out. So I'm actually going to do a piece on that and get more specifics. So it's just illusion.
Yeah, well, and the thing is, on the surface, things sort of seem like it's calm again at the moment in a way, but there's all this stuff going on underneath it.
Right. Supposedly everything magically changed all of a sudden. I mean, it was like on a dime.
Yeah.
We had all this pessimism,
Yeah.
and now there's all this optimism. And what's really changed? We still have a trade war that's going on that's having a global impact. We still have a looming no deal Brexit. We still have, and actually, if you look at what just recently has been happening with a shift in the interest rates, well, we had in August, you had negative rate debt peak at about 17 trillion with a T. As interest rates have moved up, however, that means the principal value of all of those negative rate bonds, actually any bond, has moved down. So, but yet we're not really seeing that fall out into the regular economy yet. They're keeping it hidden. And just for those viewers that don't understand how bonds work, right? If this is interest rates and this is the principal, when interest rates go down, the principal value of the bonds on the secondary market go up. When interest rates go up, then the principal value of that bond on the secondary market go down. The longer the maturity, if this is when it's issued, the greater the swing. And so it was an awful thing for interest rates to go up. It's why the markets were tanking, and then the interest rates were testing new lows. And then all of a sudden, magically, the interest rates started to go up, and that's a good thing. Except it's not for for anybody that bought a bond at that low interest level. Well, they've just lost a whole boatload of money, whether they realize it or not, because of how it's buried in, ETFs, all these Wall Street products. But, and a lot of them aren't even liquid. So that's a lot of what's happening. That's happening beneath the surface where you can't see it, but doesn't mean it's not happening.
So what is happening with Deutsche Bank and the European economy at the moment?
Oh my goodness. Well, the euro is, that whole Eurozone has been a massive experiment to peg all of those very different economies into one. Deutsche Bank just came out with their third quarter report, well, actually October 30th, with their third quarter report, and they had massive losses. So they are a zombie bank. And they're trying right now, they created a bad bank in July to try and offload some of their derivative position. And they just got approval, don't hold me to the date, but I think it was on the 16th of this month, for PNP to buy a portion of those old nasty derivatives. I don't know why anybody would, unless they think that they can repackage it and then sell it to somebody else and keep transferring the risk. But Deutsche Bank is a major accident waiting to happen. And the only reason why it still exists is because of its huge derivative book. And a derivative is just a speculative bet. I mean, just think of it like that. It's just a pure speculation, but it's something like 3 or 4 times the Germany's GDP. And Deutsche has been classified as a SIFI, which is a systemically important financial institution globally, a GSIB actually, because it's completely interconnected with the global banking system. So aside from all the scandals, which have been plaguing Deutsche forever, I don't know why anybody trusts them. I don't know why anybody would hold any wealth with them. But clearly their stock is down something like 90% since the financial crisis began to unfold. And it's sitting at something like, I don't know, 735, or it's super cheap, but it's still too expensive because all they're doing is generating losses. So, Deutsche Bank is only surviving because it would take everybody else down.
Well, that's sort of the point, I think, is like I look at it and we know that they'll be eventually moving us to a whole nother system, but the fact that they're still propping all of these things up makes me think they aren't quite ready to do that. So they seem to be prolonging this game.
Exactly.
How long can they do it?
Well, they can do it as long as the general public still has confidence in the system. And that is why it's so critically important for the stock market to keep going up. Because people think they are making money, but in reality, first of all, there's no liquidity in the market. And I just showed last week a super interesting chart on Venezuela's stock market, where it went up parabolic like this, but there's no liquidity in there. And then when they slashed off 3 zeros, bam, it actually, even though it looked like it was going up in terms of their currency, the bolivars, in reality, it lost 94% of its value.
So, Venezuela, I mean, that never seems to have come out of the mess at all. How many other countries are in a similar sort of boat?
Oh, I should do a count, but a lot of them, Brazil, Argentina, Turkey, Iran, a lot of them. And look at Greece. Greece was a mess 10 years ago. They joined the negative yield club in October, but now because interest rates have gone up, I guess I'm not really sure that they're still in the negative yield club. So you've got a country that is still struggling, and yet you're going to pay them to loan them money. We're through the looking glass. None of this makes any sense. And when something doesn't make any sense, you got to just believe that it doesn't, that there's a lot of things that are working on this to deceive you. It's called perception management, so that you move forward in a way that they want you to. They want your money in the stock market. That's where they want it.
And what about China with the trade war thing? And I noticed that, there's one day a headline that says, oh, things are looking good for the Chinese-US trade war. And then the next day there's a bad headline about it. And then a few days later it's back to a good one again. And it's like, it's sort of, and then you watch the stock market go with it kind of thing.
Well, actually, that is exactly true up until it seems like just this week. So we have to look for that shift, because you're right. First there was where they were close to that phase one, and now no, because President Trump says we've got more tariffs that are going on in December 15th, and he hasn't changed. He hasn't backed off of any of the tariff talk yet. And yet stock market doesn't care. So understand that when I say that, though, since it's moving up on declining volume, then they are using forms of derivatives also to push it up, because they want you to, and this is what's kicked in, the FOMO, fear of missing out, right? It's the greater fool theory. I'll pay more than this is. I mean, you're looking at the most expensive stock market in history ever, severe overvaluation. And yet, I'm going to buy it because I think somebody even dumber than me is going to come in and buy it after me. It's the same thing with the bonds, or treating bonds like stocks. The reason why you should do the bonds is so that you can play this movement, which is ridiculous. It's all ridiculous.
What about the repo market, or repurchasing market? How does that affect the global economy, or what does it mean, and what we're seeing with that?
Well, the repo market is actually the global financial plumbing. So you think you're being very safe by putting any excess cash into a money market account. But then those banks or whoever is managing that money market puts it into what's called the repo market, which is typically an overnight market, except then they keep renewing that overnight. And what happened in mid-September was that banks did not loan to each other. They lost confidence, they stopped doing it. And so then the central bank, the Federal Reserve, stepped in and started injecting a lot of money in there. And I just did the calculation on where we're at so far with that. And it was, I believe it was 159, no. It was 3,159,000,000,000. So in all of my work, I'm updating this every week because people want to know what's going on with that. And I give them a link so that, I mean, I just put it on a spreadsheet and I just maintain the spreadsheet. But anybody can do that. And in fact, I'm going to post my spreadsheet. So, I mean, you can do it yourself. You can go in and get all the historic numbers, but I like to make it easy for people because then they're more likely to actually look at it or follow it. But there are a lot of people that are following the repo market. So what I'm seeing with the central bank is that they are panicked. They have lost control of these markets, and the only thing that they can do is pump massive amounts of new money in there. And what happens is the more money they print, the less purchasing power value that money has. People think, oh, look at this high stock market. I'm making so much money. Look, when it's denominated in this country, it's in terms of dollars, but this is true wherever you go, right? The more of that they create, and it's pretty easy, that's a button push, the less value it has. 1 trillion times zero is zero. And my big concern for people more than anything else, what the repo market has shown us is that these markets are not liquid. In other words, you can buy, but when you want to sell, you might not be able to sell. You're not going to be able to sell. And so my concern is that people will hold their wealth in these systems, and when they want to get out, they will not be able to get out.
So people will be trapped in there that are yeah. So which I don't want to turn this into political, but I'm just sitting here thinking about before the elections, and Donald Trump was saying it's a massive bubble and the stock market's a bubble and everything's a bubble and so on, and saying the Fed needs to do this and that, and then since he's been president, he's taken ownership of the bubble and trying to pump it up even higher, or speaking like he is, and blaming the Federal Reserve when something goes wrong. It's like Donald Trump's owning the crash when it happens. So he'll be the guy that's standing there, and it'll take the focus off the real criminals, which are the bankers and all of that. And so I'm thinking that this is part of the crazy scripted nonsense.
Well, I think the biggest, I mean, yes, but the biggest thing is that he's really pushing for negative interest rates. That's what he wants the Federal Reserve to do, is to go negative. And what I find really interesting about that, the San Francisco Fed recently came out with a paper touting how wonderful negative rates are. And so all of this talk about doing negative rates right at a time when those that have been in the middle of negative rates are trying to back off from it because it doesn't work. But they're between a rock and a hard place because, again, the bond market's way bigger than the stock market. It's, the derivative market, or those bets against the bonds and the interest rates and credit quality and currencies and all this garbage dwarfs even that. Last time I counted, it was 1.48 quadrillion. And that was from my own eyes and the biz, but they changed a lot of things since then. So it's a lot bigger than that. I mean, try and wrap your brain around 1.48 quadrillion,
Yeah.
right? That's something like 2,000 times or more than all the money that flows through the entire global system, right? So that's really, these interest rates are really critical because, again, all of these bonds, all of these derivatives are issued and based upon a specific interest rate. When those interest rates move down like they have, even when you have a default, well, the rising price can mask and hide those default rates, which is what's been happening. But they can't really raise the interest rates because when they do, look at what happens to the principal of all those bonds. And therefore, as a domino effect, all of those derivative bets. This could easily, it will destroy the whole system. And there's where you're going to see that huge explosion, is if they lose control of this. And that's what the repo market is showing us, is that they don't know. This is a big, and it has been since 2008, experiment after experiment, actually probably since 1913.
Yeah.
Actually, it's just been experiment after experiment after experiment. And so I can't sit here and say that they won't, come up with some other experiment to prolong this, but they don't see any other experiments. Modern money theory, where they just print. Well, that's what they're already doing. We're already doing that. So what else are you going to come up with? I don't know. They don't know either. That's why they're trying to put.
Thing is, with experiments, I guess you have an experiment because you're trying to figure out what an outcome will be so that you can reproduce it later or do something. So as you're saying all of that, I'm thinking experiment after experiment. Is these experiments actually so that they can figure out how they're going to run their next system, the things that work and the things that don't, for them to be able to do it. So that's just a thought. But okay, we better just move on to precious metal stuff. You've got, there's been a retraction in the prices again recently, and there are some people apparently, I will mention his name, Harry Dent, who's forever says, gold's going to go down to between $1,000 and $700 an ounce, but hasn't he been saying that every year for the last, I don't know how many years, and silver to under $10 or whatever. But then on the other hand, I've also heard people that have been saying every year that gold will be $2,000 at the end of the year, and they've all been wrong as well. Where do you see this all going in the short term or the medium term even?
Okay. Well, number one, if you're talking about the spot market, which is just a Wall Street creation, it's not real, right? It costs $150 to control 500 ounces of physical gold and 5,000 ounces of physical silver. So frankly, could they drive the price down to 700? Well, they can, but the fact that they haven't says a lot about the strength of the market. So that's one thing. It's easy to do if it's an unlimited quantity and it's cheap to do. Yeah, push a button. And it has been my personal experience that every time a major event has occurred, that's when you see the biggest whacks, particularly in gold, but also in silver. So that's number one. Number two, because with both physical gold and silver, there are costs to mine it, to pull it out of the ground. And the last time I checked, so it could be different than this, but the last time I checked, it was roughly about $1,200 an ounce to mine gold. So at $700, nobody would be mining gold because they're not going to sell it for at a loss like that. So I think Harry Dent, yeah, he's not my favorite person. I don't read him. I don't listen to him other than when somebody else brings it
Yeah,
up.
I
And if
don't
I've
either,
got
but
to. Okay.
yeah.
Because he's full. Could it happen? Yeah, but why hasn't it? Because truthfully, you can make as much digital gold as you want to. And in fact, before they changed the accounting procedure, for every 1 physical ounce of gold that exists on the planet, because there's a finite amount of it, there were 62,000 digital ounces of gold that had been created. Well, I don't know, 62,001 is a pretty big number. So, also as far as going to 2000, going to this, going to that, a rising gold price is an indication of a failing currency. So, until the central banks and the governments are ready for you to see the reset, they will continue to manage the price, which is why the spot market was created to begin with. And if you go back and you read their sessions when they were first creating it, that's actually what they said. That was its most important function, was to manage how you think about gold. And there's been so much evidence, even the FOMC, which is the Federal Reserve meeting minutes, where they talked about, well, if we manipulate gold here, then that changes the psychology and the way people think about it. They do not want you to hold physical gold or physical silver because then it is outside the system and they can't control it. But at the end of the day, that is exactly how a reset is done. And this has happened over 4,800 times. So even though I can't guarantee what's going to happen next, if it walks like a duck and quacks like a duck and lays eggs like a duck, I'm thinking it's probably a duck. And if they've always revalued the currency, the fiat currency that has no intrinsic value and is only used in the financial system against physical gold, that is when you will see gold express to its true fundamental value, which is the value, the most important function that it is supposed to perform. And the primary function, the most important function for gold, is to hold its value over time so that you are always paid fairly for your labor. Because again, it takes labor to pull gold out of the ground and energy. There are real costs associated with that. So when gold was the money, it was because it was an easy way to value your labor for someone else's labor. But that's not good for governments who want to tax and spend. So that's what I can tell you about the metals.
What about in the short term then? Do you think we're going to see it going up or going down?
Well, I just did a whole thing on the chart yesterday. And so far it seems, okay, what we did was we had a cup formation. It hasn't done a full breakout, but right now it's in a consolidation inside of this range. So I think that it is more likely, especially going into December. We've got the Brexit coming up. I'm sure they're going to raise the debt ceiling, but there is a potential standoff on the debt ceiling in the US. And, there are a lot of black swans that are swirling around. So if they can keep the volatility and keep everything quiet, then it might not hit, go beyond that. But the next level of resistance on the top that I see is at 1,800. Beyond that, it's 1,900 in US dollars. And then beyond that, well, we'll just have to see where that goes. So it wouldn't really surprise me. We're not that far away. We're at like 1475 or something like that right now. So it hasn't really pulled back a whole lot. just a few bucks, because nothing goes straight up, nothing goes straight down. You got to bounce along the way. And we've had a huge move in the spot market in a pretty short period of time. So this is just a consolidation. And, it's hard to say anything short term because of how much manipulation is in all of these markets. But it wouldn't surprise me to see it test maybe 1,800 by the end of this year. But it just depends. Are they going to postpone Brexit again? What about the trade wars? What's going to happen there? Are they going to throw out that, hey, we've got a tentative agreement? We'll know by December 15th. Are those tariffs going to go on or not? We'll know by December 15th.
Yeah, I mean, I look at it all, seeing it going up and down and all that, and it's like, it's not that big a deal, because to me, the thing is, people should just have some physical precious metals, whether it's going up or whether it's going down. It's like, don't base your whole life on what the market's doing, which I think some people get paranoid when they see it moving big one way or the other. But it's like, to me, it just makes sense to hold at least some anyway.
I have been accumulating since 2002. I bought it at 1,900 an ounce. I've bought it it was like 258 when I first started accumulating it, right? So I don't really care. The only reason why I pay attention to it is because viewers pay attention to it. And so I want to help them understand what's happening. But if it's physical and it's in your possession, what people really, really, really need to understand is that there is always a market for gold and silver, because it's used across the entire economic spectrum in every country in the world. It's used in manufacturing, it's used in medicine, it's used in art, it's used in jewelry, it's used in the financial system. It's just used across every single aspect of the global economy. And therefore, it always has value. Before, when we were on the gold standard, as the economy ebbed and flowed, well, so did the price range, within a narrow range. Digital gold, paper gold, gold that is not real, yeah, that can go bam. But physical gold and physical silver never, ever, ever has, because it's got the broadest base of buyer. And that's what people really need to understand. You can't take your stock statement and go to the store and buy something with it. But guess how people have gotten through hyperinflation? By taking small pieces of silver. I mean, even this bracelet, this is a silver bracelet, and it's 92.5% pure. Okay, I mean, if I had to, I could use the whole bracelet, or I could cut off the links and use little pieces. I can barter with this. I mean, how did people make it out of war-torn countries? But by putting their valuables in their hems or sewing them in, and then using that to bribe somebody to get them out. So, tangibles. Right now, yes, absolutely, 100%. For me, I don't own any stocks or bonds because I understand too much. Now, that's not always been true, and into the future, it's not likely to be true either. But right now, with everything being so severely overvalued, I do not have the fear of missing out. I use this time and the suppression of the prices. I mean, when do you really want to buy it? When it's cheap? Look at what the global central bankers are doing. They are accumulating more gold than they ever have before. They have surpassed all. Why? If it's such an old relic and it doesn't have any value, why are they accumulating it?
Yeah, absolutely.
Do what they're doing for themselves.
And with silver, I watched that more as well. Yeah, well, here in New Zealand anyway, you see the price of silver, the spot price going up and going down, and here, there, and everywhere to some extent. But in the real market on the street, buying physical silver, it hasn't really changed that much. It seems to stay fairly constant really, regardless of what the paper market's doing. Hasn't gone up wildly and hasn't gone down wildly. It sort of stays roughly in this fairly small range. That's what I've noticed. And it's still cheap. I mean, people, even if they can't afford gold, silver is, it's easy to get a little bit of that at a time while you still can anyway.
Please. It's food, water, energy, security, community, shelter, barterability, which for me, that's what silver is about mostly, and wealth preservation, which for me is what primarily gold is about. I mean, you can do both with both. It's just the difference is with silver, it's very large and bulky, and you can carry a lot more wealth in a smaller package with gold. And look, that's why they don't like silver or gold, because it's outside of their ability to fully control, and it's invisible. Even though you have possession of it, it's invisible. So I think it's critically important, and you're right. I mean, it is so severely undervalued, and understanding what that true value is for its most important function is also a way to help you know if something is overvalued, fairly valued, or undervalued. Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? And actually, I haven't crunched these numbers in a while. But with silver, the last time I checked, the true value, if they did the reset today, the true value is like $600. So yeah, it's dirt cheap at these levels. And just accumulate it, because we all need those things no matter what's happening. Even if the stock market keeps going up, we still need food, water, energy security, barterability, wealth preservation, community, and shelter. These are the things that we need anyway.
So what about physical cash? Should people hold that and have some of that stashed away? And my friend Chris, just reading something he's written here, he said limiting cash withdrawals is being mooted both here in New Zealand and in Australia, with limits in Australia being proposed for withdrawals to not exceed $10,000. This will not stop at that as they downgrade the limit from there. This is to prepare for a bail-in scenario in the future. But nobody seems to be aware of this. Do you see this happening in America, he asks?
Oh, absolutely. In fact, clients have been sending in their own experience when they go to wire transfer funds or where they go to get cash. And, understand, too, that a lot of it is perception management. In this country, we don't have those limits yet. But because the central banks have perpetuated a myth, a lot of people are afraid to take out, more than $5,000 in their, but it's not illegal yet. And the thing about cash is that even though it's losing its purchasing power value, it still is a recognizable form of money. And what they've talked about when they come into the new digital system is still to allow cash, but to have a chip in it, so that if you get your cash out now, that they classify, and these are their words, not mine, cash in the wild, because they don't have the chips. So that is your first line of defense. And yes, there's a certain level of cash that you want to get you through that initial period. And personally, I'd rather have cash in the wild without a chip that's going to devalue it than wait and take it out then. So yes, we're watching our options grow more and more and more and more narrow until you're penned up and you don't have any options. People always want to know when. Well, look, by the time it's obvious to you, it's too late for you to do anything. So I see it because of my research. I see it every day. But yes, cash is a very important component to have. Not too much, but you definitely need some as your first line of defense, so that if they limit those withdrawals, to whatever it's going to be, $200 or less a day, which is never going to be enough for your needs anyway. You can always make a deposit, but you can't always make a withdrawal. Plus, you want it before it's got that chip in it. And you want smaller denominations too.
And of course, when you talk like this, it's like, I hope people realize that when the money's in the bank, it's really not yours. It's the bank's. As soon as it's in there and they control it, you can't just take it out, even if it's yours. So another thing Chris has asked or said is, why are there so many banks currently having outages in the US, with Capital One the latest victim over this past weekend?
I don't actually. Wow, you stumped me. I don't know about that. So, Megan, can you write this down, please? And I'll take a look at it. And if you ask me the next time, I'll tell you. But I will tell you this. That just of late, we've had, I think, 4 or 5 bank failures. And this is significant, not because of the number, but because for a long while there, we had 0. And so this could be a shift in the trend, because banks should not be failing right now. They're getting too much support from the central banks. So I think that is something that's really critical to look at in the banking system, is how that's changing. So I haven't fully done my research on that yet, but that is a new development, and I think it's a significant new development.
Okay, so to close out, what would you suggest to people to do right now? What's the most important thing that you'd tell people to do?
Well, I think that people really need to take a look at how and where they are most vulnerable. Now, personally, since I've studied currencies since '87, I developed a strategy just based upon those repeatable patterns. And that's something that all of our strategy specialists have been trained in, and they know how to help you. But you definitely want to be accumulating physical gold and silver. If you're in the stock markets, take some profits. Even if you want to stay in, at least get some out while you still have the ability to do so, and convert it into real money that is in your possession and your control. So that's, you want a variety, beside cash, you want a variety of sizes in both gold and silver, because there comes a point where cash becomes irrelevant. So you don't want to use more than you need to. But also food is the biggest issue when we go into hyperinflationary event. Food and then medicine is the biggest issue for most people. So if you have the ability to have a garden, have a garden. If you don't, dry beans and rice are a complete protein, and that's easy to buy, cheap at the moment, and to store it. So I would honestly say that you really want to be as independent as possible moving into this, which is why community is also so important, because there is safety in numbers, and there are different skill sets that one person might have, and assets that one person, like I have a huge garden, right? Well, you can come and work in my garden and you can harvest. So you really want to look at, where am I vulnerable? Food, water, energy, security, barterability, wealth preservation, and start to fill in those holes. And just the way that I did it was I would look at that and I would say, okay, this is where I feel most vulnerable. And I would just fill that hole, and then I would go, okay, now this is where I'm most vulnerable. And I would fill those holes. But we're running out of time. I can't tell you it's going to be Tuesday morning at 8:35, but it could be. So just get her done. Don't wait. Don't think you're going to know and be able to do what you need to do 1 second before the crisis happens, because I watch it all the time. I'm highly technical. I've been a banker. I've been a stockbroker. I understand what I'm looking at. And if it happened like 1 second before, that's luck. So I've been seriously working on this since 2002. So I would say get her done. Start wherever you can start. You're right. If gold is if you can't afford gold, you can afford silver, but you want it in your possession.
Yeah, that's very good advice, and I totally would second that. We've covered an awful lot of different things in this show. You know, we haven't just stuck to one subject, so we've kind of been a little bit bombarded with this thing and that thing and questions, and you've done an awesome job of covering them, you know, at this sort of level. But if people want to, you know, find out more, obviously you put out very regular videos that go into a lot of these things in far more detail. So maybe you should tell the listeners who don't know, I'm sure most of our listeners already do, but there may be some that stumble in here that don't know how to find you online. So you could let them know that now.
Absolutely. Well, itmtrading.com is our website, and there's a lot of information. There's a blog that's there, and I put the links to all my research materials there so you can do your own due diligence. And then on the YouTube, if you put in ITM Trading, and Megan, where else our videos are also on Facebook?
And Brighteon.
And Brighteon. So we have backup there as well. So we're pretty easy to find, or you can Google my name, Lynette Zang. I'd probably also come up in the YouTube videos. But yes, we do produce at least 3 every week.
And your website URL again?
itmtrading.com.
Awesome. Yeah, well, I've thoroughly enjoyed this again, and you know, we'll have to do it again.
I always enjoy your phoning.
It's fun, and you know,
absolutely. I feel like you're my old friend now.
Yeah, I really enjoy it. So we'll have to do another one before too long again. Who knows what the rest of the year is going to bring? It's hard to know at this point.
So, I mean, oh my gosh, I really have expanded a lot because there is so much that's going on. So we have definitely shifted in this trend. And not in a good way, I think.
Yeah, there's a lot more even subjects and questions I could have asked, but I guess we've probably given people enough stuff to think about for one episode. So I want to say a big thank you to you for being on the show again. And thanks to Megan as well for organising all of this.
Yep, she's great. Thank you.
Yeah, and thank you, and we'll have to do it again soon.
Absolutely. You take care.
You too. And folks, also don't forget to visit aminutetomidnight.com, our website, and you can find all of our A Minute to Midnight episodes on our website and on YouTube and also on iTunes. Please subscribe and follow all of those platforms, as you never know what may be taken down. Well, our website won't be, but you never know with YouTube, and hopefully iTunes is pretty stable too, so don't forget to subscribe and like this video, give it a thumbs up and share it as well. A Minute to Midnight's run 100% by donations, and if you find our videos helpful, we really do greatly appreciate people that donate to help us keep this running. Certainly can't do it without your help, so thank you folks, the ones that are helping. It's very much appreciated. The music used in the shows I've written, played and recorded, and if you want to download it you can find that on our website as well. We also have a forum and a Facebook group. That's it for this episode of the show. Thanks for joining us, and we will be back in a few days' time, God willing, with another episode of the show. Have a great week and God bless.